Good morning, dear customers. As you can see, for the past couple of sessions, the volatile moves in the foreign exchange market still continue, and that points to the fact that we have to be safer when we make our choice where to enter the market and what kind of currency to use, what kind of currency pair to use. Yesterday, the moves in the euro dollar as well as in other majors were rather abrupt. The euro, as you can see from the chart, the euro dollar once again touched maybe not the highs, but approached the principal high of the previous session of 123.23. The high during the past session was registered at 22.88 at this platform. But I'd like to point out the fact that it seems the pair tries to form a kind of interim top against the lows of 2008. If you remember, it was the crisis level of 2008. In the weekly chart I can show this, and the low was registered around 123.25, 123.30. So at the moment the euro started to form a kind of a possible topping process against this level, and that should be caution us against aggressive policy of chasing the currency higher from here. Anyway, while the pair is above the highs, former broken highs of 2017 at 120.90, we like to see the pair higher from here. Any kind of pullbacks closer to that level of 120.90 should be used to buy the currency to follow the trend higher. That's why we are ready to buy the currency below 21.20, and we have put the stop, as you can see. We put the stop a little bit lower than before. We replaced it, we moved it to 120.65. Why? Because of increased volatility in the foreign exchange. And we expect, if the pair will go lower from here and touch the levels of 121, we will be lucky to enter the market at 21.20 and maybe not check the support level, our stop loss level we mentioned in our report. Anyway, regarding other currencies, dollar yen still the same. We are ready to sell the currency on a pullback closer to the former broken level of 112. Let's see this in the market. Let's see this on the screen. You see the dollar yen on the, let's use the 4-hour chart. Here, the level 112 was broken. After that, the currency pair moved lower, making a low around 110.20, and this level also represents a kind of tough support at the moment. But anyway, the pair should be looking like a sell at the moment, while trading below 100, 200, moving average line 1171 and a half, and also because we still trading below the longer term downtrend today lies around 113.80. Till that moment we still expect the pair lower, and will use a possible pullback closer to 112 level to sell the currency with a stop below, with a stop above 112.15. We initially target the level of 110.20. Sterling dollar, the cable. made a kind of very interesting up spike during previous global session to the highs of around 139.40 yesterday. Before moved sharply lower and now trading around 138.20. We still chase the pair higher. We expect sooner or later the psychological level of 140 will be tested. And from this point of view, we are ready to buy the currency on a possible pullback closer to the former broken highs of 2017 of 136.57. That's why we are ready to buy the currency on a pullback below 36.80. We are ready to add to a position at 36.20 and put a stop below 35.85. Initially, we target 139.80, a level just 20 pips away from the psychological important barrier 140. Dollar Swiss still here without any kind of changes. We are still expect if the pair will move higher from here, we will use this opportunity to short a position. But we will start do that around 97.30 level. The moving average 4-hour line, which lies today at 89.19, represents a kind of very interesting line. While we still trading below that line, we expect that the pair should proceed its way lower from here. That's why we are ready to sell the currency on a possible up spike to 97.30 to enter a short position. We are ready to add to our short and a possible retest of 97.95 level, 98 approximately, roughly speaking, with a stop above the highs of January 10, registered at 98.45. What's about other currency pairs? We still long in Australia dollar. Yesterday the pair tested the waters above psychological important level of 0.80. The high registered printed high was around 0.8020, but we still long with the stop below 78.75 and expect the pair will test the levels of above 0.81. If you remember from the graph, there formed a kind of a double top above 0.81 level during the 2017. So we expect the pair sooner or later will test that level, and we in this case we will close initially our long position. The New Zealand dollar, we expect a pullback to 72.30, ready to add at 71.50. We still hope the pair sooner or later will go higher from here, so the uptrend should continue. And you can see there is a trend line, uptrend line, short uptrend line, which intersects today at 72.10. Let's say from the very short term point of view, any pullbacks closer to that level of 72.10 should be used to buy the currency. This is our opinion, this is our strategy at the moment. So we prefer to start buying the currency around 72.25. Yes, if we can see this closer, you see 72.20 is the uptrend. So we prefer to buy the pair undershooting of 72.30, ready to add on a possible move lower, closer to the lows of January 9 of 71.40 with a stop below below the level of 71, below the 71.30. You see that level here. Regarding other positions, cable, unfortunately our short position, average aggregated position at 25 was closed yesterday. During the volatile trading, just after the results of the Bank of Canada rate decision yesterday, the pair initially went higher to the highs of approximately 25.40. After that moved lower to its critical level of 23.50-40. If you see this level, you can see on the daily chart there is a kind of a pivotal support around that level. Let's see the 4-hour chart. On the 4-hour chart you can see that. So the level of 23.50, here you can see that even 23.40 should be a tough barrier to break at the moment. Anyway, it's from our point of view, it's just a matter of time we break this level. So now we prefer to wait for a possible up spike closer to the resistance barrier of 25.50 to resell the currency, and we put in this case we put a stop above the lows, these lows of 26.20. That's why we put a stop at 26.25, and we still target at the level of 23.50, retesting of that level. If the pair will break that level, we think that sooner or later the pair will retest the lows of 2017 around 120.60. Euro yen still in its uptrend. Let's switch off let's switch off this ref. We don't use at the moment. You see the pair still in the strong uptrend after initial pullback during previous week, when the pair went to the lows of 133. We suggest at the moment this barrier should be a kind of pivotal support for the currency, while above the pair should proceed its way higher from here. But let's again say our longer term opinion. While the pair is still trading above its 200 weekly line at 185, we the psychological barrier 130, the pair should follow its suit to the upside. And longer term, the pair should target its longer term downtrend around pivotal level 140. We think that during 2018 the pair should test this level. So any kind of pullbacks, and that's why we are ready to buy the currency on a possible undershooting of 133.10. Any kind of pullbacks should be used to buy the currency to follow the trend, longer term trend higher. Euro Swiss. The Euro Swiss still in the consolidation period, as we think, because on the volatile sessions, maybe rising risk aversion fears, all this kind of stuff with American shutting down of American government. Of course, all these factors don't bode well for the higher Euro Swiss, Swiss crosses, also for the dollar Swiss as well. Anyway, here we expect a possible kind of continuation of the consolidation period. If the pair brings closer to the level of 116.80, we will start initiating a new long position in the currency, because from the longer term point of view we still targeting the barrier, former barrier defending by S&P or 120 in 2013, 2014. If there are traders among my subscribers who remember that period of time, so we still chasing that level, we're still aiming for that level. So any kind of pullbacks closer to 1680 fast reliable support to 116 should be used to buy the currency with the stop below 115.40. And let's finalize our today's analysis by euro sterling and euro ruble. Euro sterling still we treat it as a kind of neutral, while the pair still trading below the multiple top formed above 0.90 level. At the same time, any kind of retreats to this pivotal support formed against the lows of 86.90, this kind of support should be also be bought from our point of view. You see that the pair is still fluctuating again around along its moving average 200 daily line, which intersects today around 88.30 level. And while the pair is still here, it should be treated neutral. That's why we are ready to sell the pair on a possible up spike closer to a psychological level of 0.90, but at the same time we're ready to buy the pair on a possible down move closer to the support barrier of 87.60. That's why we will buy the currency at 87.70 with the stop below 87.30. Maybe it's wrong, but anyway we still treat this kind of pair like in a consolidation range trading mode. And finally the euro euro ruble. Euro ruble, I don't know how the ruble will open the market today at 10 o'clock of Russian time. It should go higher from here. Anyway, this the same. There is a psychological level of 70, should present a kind of a tough barrier to break at the moment, but any kind of retreats closer to 68 level and especially to 67, the lows of October, around 67.04 the low was registered, should be used to buy the currency from a longer term period of time. We still expect the pair will go higher from here. That's all for the moment. Thank you very much you were with me during today's report. And excuse me once again for my English, maybe for my kind of technical mistakes. We will improve our knowledge on that, and I think that sooner or later our analysis will be much better than before. See you later. Bye bye.